Hello, welcome to FundForum Asia 2017. I'm Sarah Clarke, joining you from the JW Marriott Hotel in Hong Kong. Thank you for joining us for our daily live panel discussion. So over the next 15 minutes, we'll discuss some of the key subjects that we discussed or we were debated today and a wrap of the events. But firstly, let me introduce you to the panel. We've got over here, we've got Vineet, Vohra from Arete Financial Partners, Dong Zheng from Xuanji, and we've got Resnik from Finametrica. The dominant issues on day one have been next generation distribution in Asia and China's expanding market and strategies for asset managers to grow their business. Let's start with the digital trends driving this region. I'm going to go straight to you, Vineet. Looking at the mobile and digital client experience, it's the new currency of success across the wealth management industry, but what's the uptake of digital advice in Asia compared to elsewhere?
It's slower. And there are many reasons for that. The first and foremost is that most of people's money is with banks, and banks haven't been early adopters of digitization, as it were. And that's not surprising if you start to look at other parts of the world. Most of the digitization that you see has come from disruptors rather than from the institutions who hold all the wealth. And that trend will perhaps also eventually percolate into Asia. And we are seeing a few examples. If you look at China, the enormous success of Yuebao and Alipay is suggestive that disruption can be tremendous, but you just need to find the right working model. The point being, of course, that neither Alipay nor Yuebao are from the traditional space. So there is disruption potential, but within the traditional world, I think the take-up is still reasonably slow, but it's changing.
So, Dong, is it a scenario where the customer or the client here is loyal to the banks? They like to keep their money in the banks. Therefore, how is the market or the asset management industry going to target and get the uptake to increase for the client?
Yeah, I think first, I think the uptake of digital trend in China definitely is probably one of the highest in the world, if you ask me. But the problem is not digital advice, but digital distribution. Digital distribution means there's a few reasons. Number one, clients in China tends to believe in themselves. They want to take active trades themselves, right? So looking for a platform that is efficient, lower cost, and offer as much as a variety of products becomes utmost important at this moment. And if you want to provide digital advice in the first place, you need to gain the person's trust, right? And today in China, I think it's probably they want to see a real human and face-to-face before you can develop trust. So I think that's part of the reason why the take-up of digital advice is relatively lower in China compared to digital distribution. And I don't think the Chinese customers has a particular loyal to banks. Otherwise, Yuebao won't be successful in this market. It's just like what Vineet said, we need to find the right disruption techniques or innovations. The potential is definitely here in Asia.
Okay, I want to take it over to you, Paul. Looking at robo-advisors, you've been working on robo-advisors on that strategy for some years. It's a silver bullet in the US. Will Asia or will this region eventually follow that lead with such strength as, say, what we've seen elsewhere?
I think I debate the whole issue. It's not a silver bullet at all. But what we've got is a couple of disruptors in the US who have come in and look like they've almost maximised out. So we look at Wealthfront and Betterment. The others are actually institutional brands, and what they're doing is redirecting their business that was coming in anyway and calling it its robo. So what we've actually got is technology bringing the business to be more efficient, but I think it's very easy to make a mistake and say that there's a revolution underway here. There's not. What we've actually got is the application of technology to meet some people's needs and enhance the speed and accuracy of advice, and here will be the same as everywhere else. The technology has to match the cultural needs. As we were saying before, if you're looking for a portfolio, advice might be a good thing. If you just want to do a transaction, there'll be a whole series of platforms that will be also using the same technology, which will do it infinitely more easily. So transaction versus advice is really the issue in Asia much more than anything else. And I've got no sense of advice is valued here at all.
Okay, what about the diversity then of platforms? Does there need to be a greater diversity of platforms then to kind of ramp up the access for clients, say, in Asia?
Yeah, no, absolutely. And to pick up where the point that was just made, I think it's important to be able to find horses for courses. So if you are, at the end of the day, trying to find a solution for, say, transactions, by all means, digitization is the right way to go, because what you want is efficiency, you want objectivity, you want immediacy, instantaneity. And there are many examples of digitization actually making their way quite well. I would prefer to do things digitally than to engage with a human if all I want to do is, move some money around. When it comes to aspects, however, that appear to be higher value added, yes, there is opportunity for human engagement, but the irony seems to be that most investors prefer to do things on their own. So the challenge is, how do you create the confidence, and can digitization step in where humans have failed? Through robo-advisory, forming portfolios as an example, through robo-advisory bringing in the objectivity that humans otherwise may not have and may all be behaviorally flawed in our ways. So I think in many ways digitization can open up newer doors. The actual world of manned management, if you will, is still very small. Say there's $40 trillion of wealth in Asia, only about $1.5 trillion is actually in the banking sector. And so maybe that's where the digitization lever can open up doors.
Yeah, it certainly doesn't feel to me like it's going to be advice. We're going to do better with portfolio construction, but I'm not left with any great confidence that Asians are particularly interested in portfolios. When I look, it's a very Anglo thing to diversify and spread have money in different places. That's not a traditional Asian perspective, and I think that comes with, you need to lose money several times before you start realizing that diversification is your friend.
Have you done? What are your thoughts?
Well, I think having said that, I think one notable change in the Asian distributors, actually, especially Chinese distributors, are beginning to change, right? Because they realize if they just do product push and they leave all in the hands of relationship managers, it's not going to be a sustainable business, right? Because the clients may ultimately lose money, and the relationship managers may not be always on the same side as the clients, and the fees and costs becomes to ramp up, and all the royalties are within the person, not with the institution. So they realize these problems and they want to change. Being a service provider myself in the market, I do see a lot of recent requests that want to build robo. But one thing I think what's going to work in this market is actually a human robot combination kind of service provider, right? I mean, the institution using robo to provide a standardized service, low cost, standardized service, so that relationship managers will not be able to just offer whatever solutions or to product push to a single client. And the clients still talk to the relationship manager and get a sense of comfort and trust. I think that's probably going to work.
So are you actually saying that the technology will be used to de-risk reputation uncertainty for enterprises?
And standardized services and make it more efficient, etc., etc. So be able to provide more controls. Yeah. Because like what you say, I think digital advice has been available for many years. Actually, in big banks, they always have this things for relation managers to use, create your client's portfolio, etc., etc. I think that the robo is just to make sure the execution also coming in, right? Yes. So everything is done within one button for the clients.
So the industry basically has to offer a diversity to the client. Absolutely. And this is where I was going to come to you, Vineet, looking at the importance of the human touch. We have the digital platforms, but I mean, we still have the client wanting that human engagement. How important is that?
Well, I think it's very central. But again, it's really, there isn't one client, right? If you were to break up the client base demographically into the baby boomers and the millennials would prefer a a lower manual touch and would prefer the remoteness and the reliability of something that's more digital. Whereas baby boomers would prefer the convenience of getting the tedium of managing money to be taken care of digitally. So I think it will be a horses for courses sort of a thing. So digitization can have two different streams start to overflow. One where it's providing convenience and the other one where it's providing objectivity. But it is clear in both cases that you can't take away the human touch.
And particularly for boomers, and it's a very good point, because in accumulation, market volatility is the client's friend.
Yeah,
it's the reverse for boomers. You know, we've just started seeing people de-accumulating, and of course the market volatility is a great anxiety. You don't want to start pulling money out in large swathes as we see a market go into a correction. And so, you know, sequence risk. So when you're in that position, that's when you actually do need advice. When you've got the maximum amount of money you're ever going to have, give or take within a few years of retirement, and you stop making contributions to that and start taking it out, that's where all your vulnerability comes in. For getting algorithms to manage that, that's going to be a real challenge.
I also want to echo a point that was just made very quickly. There is a lot of value addition for the enterprise as well by bringing in digitization, because it actually helps de-risk the business. There is too much of reliance on individual human action, which conversely means that inaction can cause trouble. And like when the markets are falling and the phone's ringing off the hook, where is the broker? Where is the relationship manager? And it's times like those where digitization can come in and de-risk the business and plug a gap.
But the interesting issue in this is we don't have much knowledge on how to run portfolios and de-accumulation. And it is really, that's the problem. Where is it going to come from? I can't see the research that says this is how you run a portfolio. The natural thing we do is de-equitize the portfolio, which guarantees underperformance. And that's the institutional worry, that you say what we'll do to de-risk the current problem is we'll take equities out of the portfolio, saying these people can't afford the risk. When in fact what it's doing is it's adding risk, because you're taking away all the possibility of that portfolio performing.
Yes, Sarah.
I want to take it to the next question, or the next angle of this discussion, is looking at the Chinese customer of tomorrow. We've discussed the millennials, we've discussed the online generation. It's bigger than that. What does the customer of tomorrow look like, you Dong?
I think number one, they don't want to go into a branch to spend like a whole day to do banking business, that's for sure. So digital transaction capabilities must be there for the Chinese, I think for everybody actually, probably in the future, right? So that's very, very important. And number two, it's very interesting, right? I mean, I totally agree that if you are going to do accumulation, you need to afford the max kind of volatility so your money can grow long term. But we all know from a behavioral finance perspective that people has different level of tolerance, right? So that's why we rate people with different risk profile and put them into different basket of portfolio. Is that definitely the most right thing to do in terms of financial accumulation? Maybe not. But that's the most comfortable thing. That's the most de-risk thing that an institution can do in terms of wealth management, because this guy literally cannot tolerate a 30% drawdown in a financial crisis. And they also cannot assume this guy can just keep holding this portfolio and not complain and see the portfolio coming back, right? So that's why the robo thing that will work for the future Chinese, at least for the Chinese generation, with a man hand in hand and tell the person, right, this is the right thing for you, and provide some condolence, right, when the market goes down, and yeah.
And I think that's so important. We can't have presumptive paternalism, which is what the Americans have done with their target date funds. They de-risk portfolios and leave people to really suffer that later on. And for everybody, the challenge in this is, for some people, they need to take more risk. And they need somebody to hold their hand. Correct. And that's why we do need these bionic or cyborg, particularly for retirees.
And I think the advice comes after education, right? Yeah. People do believe in your advice if they agree with your approach. So that's a first step that probably a lot of Asians have to, diversification is a good thing, long-term investment is a good thing, right? You need to play with the market volatility, etc. If that is not in place, it's very difficult to come with a pure digital kind of advice because they don't understand what you are doing, right? Why are you selling at the peak? Why are you buying? It seems the market is not good. They don't understand what you do and they probably don't trust you.
I think the missing piece here is an absence of an objective. If you don't know where you're going, you won't relish why you need to do what needs to be done. So we need to put back focus on the ends so that the means become justifiable. You spoke about risk levels. If you have a long-term retirement orientation, you actually, even if you think you're low risk, you should be able to put time on your side and actually take on more risk. Now clearly an advisory engagement there would be anathema because you would be looking at every little blip in the market, and in that sort of a situation a robo-advisory solution would be fine because it takes a human out of the game and you're committed because you know it's retirement and it's working robotically almost to a certain form. Whereas if your need is much more shorter term, perhaps you don't need a robo-advisor solution. An advisor can, suppose it's college education 4 or 5 years from now. So I think that what we must bring back to the center of the plate is why are people doing what they're doing? What are their goals? What are their objectives? What are their preferred styles of engagement? You almost need to decode the style need genome for every investor.
Yes.
Do you think the industry is delivered then for the client in China, or do you think it needs to adapt more? I mean, has the asset management industry not met or adapted to what the Chinese customer wants?
Well, I think they're early days. The Chinese market is mammoth and it's still very early stages of evolution. I think once again the success of Yuebao shows that people are willing to entrust their assets over to somebody who can offer more. The challenge is to take a more systematic approach because it's not just getting more than cash on your money, it's actually being able to plan for retirement and being able to outlive inflation for that matter. And a lot more has to be done in that space. So there should be more tools in actually helping people get the start right, get people to understand what are their goals. Robotic tools, perhaps digital tools can help there, and then to have the banks or the robo-advisory options come in as a solution rather than as another product.
Dong, do you agree with that?
Yeah, I think today most of the robo-advisor has actually done what I call robo-investing rather than robo-advisor. For example, who gets the clients to understand their goals? Because we don't plan our lives that in depth, right? We probably do things prompt, and I don't want to plan in advance, 10 years or 20 years or maybe 50 years in advance. So is a tool, digital tool, good enough for me to plan my own objectives? So I think from that part, maybe there are some very innovative ways going forward. It can help the clients to do that, but I don't see that today happen in the industry, and maybe the industry can do much more on this part, is to help the clients to understand themselves in an interesting way, in an innovative way.
So do you think the industry needs to ramp up in the form of digital competition to deliver in those means and to a market that's obviously huge when it comes to the global market growth?
Well, it's a huge market and we've not invested in understanding clients. It's always been, there's always another client. We don't need to spend too much time. We just need to now look at the present value of a client is so immense. A 50-year-old is going to live for another 40 years. The present value of the income stream they generate, we should be investing huge amounts in understanding clients' needs and systematizing. That's what big data brings into the game. And if we was to say, I've been in the industry a long time, we're at one of those interesting points where we're suddenly talking about clients and we've now got some technology applied to it. And there's an enormous amount that's emerging. You can see in 2 years' time, so much will be focused on helping communicate with clients in a manner in which they would prefer to be spoken to, because we can pick that up from the big data behavior. Before, we just talk at them as if they're interested in the way we talk. So it's going to be infinitely more personalised by using technology to do so.
So that is a huge opportunity, and many banks at least have started to take that role of using digitization to extend their communication with clients, because you can't always rely on the RM to get it right.
Yes.
And so being able to complement it, being able to foolproof it is something which many banks have started to adopt. So it's not just about selling, it's also about servicing.
Because you want to communicate with people the way they prefer to be communicated
Exactly.
with.
Let the
And
client
some
decide.
people are visual, some people want words, some people want numbers, some people want facts really quick, others want to be able to look at it later. We never ask.
Would you say China's certainly it's a complex or complicated market to deal with? Is it a challenging one? Is it a misunderstood, or is the industry still catching up?
Yeah, I think definitely it's a very complicated market, and I would say it has a huge potential in wealth management because you have about 100 trillion of yuan to be managed in China, right? And 60 to 70% of that is today still in fixed income, not to mention real estate. That's another big chunk of it.
Yeah.
So you have a lot of money waiting to coming into the equity space, and they do need advice because if you look at the Chinese investors, they like to do frequent trading, but they're not that successful, right? So again, as I said, it is complicated because I think the Chinese investors has not come to the realization that how to invest rationally. So anybody who can crack this problem will have a huge opportunity in this market.
Well, if it's any easier, that's not just a Chinese problem, that's a very human problem. We are behaviorally flawed, and if we are, we'll end up being bipolar. We'll keep all our money in cash and then speculate with a small proportion. And the answer to that lies in education, and digital education, manned education. That's kind of where the future is.
Can I throw out to one big question to look to kind of wrapping up? Outlook, how long do you think it will be until China is leading the market when it comes to global growth in the asset management industry, or is it already? 10 years, where do you see the market in China?
I think it's not up to the Chinese investors. It's really still back to the Chinese
Industry.
economy growth, right? I mean, Yuan today just passed about 1 trillion yuan, so that's about 100 billion, 150 billion dollars. It's probably one single largest money market fund in the world. That says the potential of the asset management and wealth management industry of China. If China continue to produce wealth and people continue to accumulate wealth, have high saving rate as Asian behavior, and I think there's a huge opportunities. But that doesn't mean that the China asset management companies necessarily take the huge chunk of the business. They also give opportunities to a lot of foreign asset management companies, because today another worry about Chinese investors is the currency fluctuation, right? They don't have to worry about that in the past 10 years, but coming to 2015, suddenly 2016, they realized that their currency is not always appreciating. So that brings the big problems and also opportunity, I would say, for the opens to the foreign asset management companies.
Vineet?
Absolutely. I think the more China opens up, the more there will be actually an infusion of risk and opportunities to diversify, and the more there will be newer players who will come in, who will offer solutions there. So I think we're going to see some of the most dramatic changes in the Chinese market, and for that matter, in the wider wealth management space in Asia. So these are indeed interesting times.
And for me, it's the regulator needs to do this carefully. I've watched the regulator in various countries. They all use the same language, but they use entirely different mechanisms to encourage. If I just take the two extremes, America and the UK is very prescriptive at the moment because it's learnt that the market will run not very well for the benefit of end users without that engagement. America hasn't done that yet. And it's still, if you don't do well in America, take class action against Merrill Lynch, and that's a really difficult way. So the important issue here is for the regulator to get a good balance between setting reasonable standards and encouraging people to follow them.
And thus far, the regulator in China, has it been too heavy-handed, or how would you describe it?
I don't have a perspective on that. I haven't seen anything
Just
clear
quickly,
at all.
I mean, the regulator in China, is it a hurdle for the industry, or is it?
Well, I think regulators around the region are trying to do two things. One, help develop the marketplace, and two, also promote a orderly development, and three, to ensure that the investors are protected. So it's a complex set of objectives that they have, and I think China has perhaps more responsibility than most because the value at risk is tremendous, and equally the opportunity is huge. So I think they're doing a fair job of considering the size and scale of what they have to manage. But there are other regulators who are at the leading front of change. Singapore is an example. I think Australia is another very fine example. Hong Kong is doing a wonderful job as well. India has come very far in terms of regulatory development. So So this is certainly an interesting space. There's a lot more latitude being given to industry development, less so perhaps than in the more developed parts of the world, because they have a bigger issue to worry about. What happens if things start to go wrong? That's perhaps less of a concern here.
You have to give Chinese regulators credit so far for fintech development, that they do have some tolerance level to allow the industry to develop first and see from a practice what's the problems and the potential issues, then work on to correct it. P2P is one of the example, right? They just recently to start regulate this space, and before that it's nearly kind of an open for competition kind of thing. So I think that's a very open attitude for the Chinese regulators compared to other regulators in the region. But I also know that they do talk to each other. The regulators talk to each other very frequently, and so we do probably expect to see a very unified regulatory framework, I think, going forward for the fintech space.
Okay, look, that's a wrap for day one of the FundForum 2017 Asia. You can tune into more discussions online. If you look at Twitter, you can find the account or the feed at FundForum, or look for hashtag FFAsia. Thank you to our panellists today. We'll be back tomorrow for another live panel discussion. Please join us. See you tomorrow.